All right, so we got finished with 2.2 last week, which we looked at the direct materials ledger, moving things from direct materials to work in process, and then moving things from work in process to finished goods, how we journalize those. We also looked at how to calculate factory overhead. So all of those were for a manufacturing business, which means they make their own materials. There are some service businesses that also keep up with cost on a job order cost system. So the alternative we said at the beginning of the chapter is either you record cost by job or you record cost by process. And that's what chapter 3 is going to be on, is process costing. But for right now, we're looking at job order cost systems for service businesses. So it says a job order cost accounting system may be used by a service business. All right. However, whether a service business uses a job order cost depends on the nature of the service. So there's some service businesses where it does not make sense to use job order costing. And in that case, they would use process costing. All right. So for example, hotels, taxis, and newspapers would normally not use a job order cost system. Do you guys have an idea why they wouldn't use a job order cost system?
There's so many small jobs trying to divide it all.
Yep. So, and we're going to get into that as well. All right. But an attorney, an accountant, hospital, they would use a job order system because each job can be so different, and each job can require completely different sets of materials or time or however a company records their cost, that they need to have it separately recorded. Like for an attorney, you might have an easy case, which I admittedly don't know much about legal work, but I would assume there are some easy cases where you might only need a few hours worth of work. Then there's some that could be very extensive. You could have lots of research. You could have professionals that you'd have to interview and things like that. So those jobs would look completely different than, say, the easier court cases where you just basically show up and then leave. Same thing with an accountant. You know, an accountant where they had one job all year, they didn't have anything interesting or confusing happen, and they just file a simple 1040 EZ form. It might take an accountant 10 minutes to do their entire year's worth of taxes. But then you take somebody that they ran their own business, so they would have a Schedule C, they itemize their deductions, they have lots of investments that they sold and bought in the year. And I mean, you could have substantial work that you would have to put in to figure out their taxes. Well, you're obviously going to charge those people different because you would need to use different resources and things like that. So it makes sense for those type service businesses to use job order costing. Same thing with a hospital. You know, if you come into the ER and you had a cold and they basically tell you to go home, versus if you had a traumatic wreck, the way that you're going to get treated and the services that you're going to require are going to be completely different. So they wouldn't treat those under a big blanket and cost them out by process. Each one would be a different job, and it would make sense to split those costs out like that. Okay? So service business using job order costing normally renders a service that is unique to each customer. With a newspaper, with a hotel, with a taxi, you're doing the same thing for every customer. You're providing them a newspaper, you're driving them from point A to point B, you're providing a room for them to stay in. So, you know, the process is the same for each of those businesses per customer. So it wouldn't make sense to split it out by job. All right. And then it tells us while hotels provide a service, the service is the same for each guest on any given night. In contrast, an attorney or hospital provides a unique service for each client or patient. Okay? So how do we do that in a service job order cost system? So since the service is being provided, the primary product cost would be direct labor and direct overhead. You wouldn't necessarily have direct materials because you're providing a service. So the materials that you would use or the supplies, in terms of the overall job, they would be insignificant. So they're going to be lumped into overhead costs, basically. So you think about the hotel, they have sheets. You can't. Sheets they're expensive, but they wouldn't be, to that individual customer, the cost of one set of sheets would not be considered significant. So your materials costs will be lumped together into overhead. All right. So, sorry. Like a manufacturing business, the direct labor and overhead cost of rendering services to clients would be accumulated in work in process. All right. And just like on the job order cost system, work in process would have a cost ledger where you're going to break it out by job, the cost for each one. Okay. Then when a job's completed and the client's billed, the cost would transfer to a cost of services account. So a service business that has job costing, their income statement's going to look different than a normal service business. So with, say, Delta Airlines, they don't do sales, they have fees earned, and then they have all of their period cost, and then they get their net income. With a service business where they're providing a service and they're using job order costing, they're going to have a cost of services account to be able to basically determine gross profit per job. Okay? All right. Now, in a service business where you use a job order costing system, you would not have finished goods. You wouldn't have a finished goods account. Why not?
It's a job finish, huh?
Yeah, it's not. You're not providing a good at the end of the stay, or at the end of your job. You're providing a service, so you wouldn't have something that you bundled up in a bow and provided to them. It's just, it would all be considered as a service. All right. So you could also bill clients in advance. So one thing when I worked at Eaton, Babb & Smith is that some customers, we would bill in advance, especially if someone wants to take an extension on their taxes. So say that you have a complicated income summary. You have until September or October, I can't remember, to actually file your taxes. But by April 15th, you have to file a form that says, hey, I'm filing an extension. I'm going to wait until October to submit my final tax form. But then also, you have to go ahead and pay in your estimated taxes. So you can't basically delay paying from April to October. If you know you're going to have to pay, you have to go ahead and pay your estimate in then. And if it comes out in October that you owe more, you get charged interest on the amount that you underpaid. So in a case like that, if you're an accountant and you had someone that was filing an extension and you know you're going to have a lot of work, you may go ahead and bill some of their services in advance. Okay. Now, if that happened, how would we treat that payment from them? It'd be deferred revenue until we actually complete their return. Okay. And deferred revenue is a liability. Okay. Let's see here. All right, so let's look at checkup corner 2-3. Okay. So it says the MadFly agency provides consulting services to a variety of clients across the country. The agency accumulates costs for each consulting project on the basis of direct labor cost and allocated overhead cost. Their estimated direct labor and overhead for the year as follows. And it says MadFly allocates overhead costs to individual jobs based on the total estimated direct labor hours of its professional services staff. Okay, so they have 20,000 projected direct labor hours. at a rate of $180 per hour, and then the estimated total overhead is 1.2 million. And then they ask us to determine the estimated predetermined overhead rate for the year. All right, so how would we do that? And the way that we do that is we have to take, number one, we have to figure out what are we trying to look at. We're looking at overhead. All right, so they give us their projected total overhead cost for the year, and it's $1.2 million. All right, so we're going to take that $1.2 million, and that's in total, and we're going to try and find a per unit measurement. So they have to say, well, how are they allocating their overhead? They do it based off direct labor hours. So we know that 20,000 hours is the projected number. So you take the 1.2 million in total overhead cost, divide it by 20,000 direct labor hours, and what we get is $60 per direct labor hour that we're going to charge to overhead. Okay? So that's part A, the estimated predetermined overhead rate. All right. Then in part B, it says Madfly started and completed a consulting job for MT Industries during the year. All right, job number 402. And it says this job required 200 direct labor hours of professional staff to determine the cost. Okay, so we already know that the hourly rate for our staff is $180 per hour. So we take total direct labor hours of 200, multiply that by the $180 hourly rate to give us direct labor cost, which would be $36,000. Okay? Then, so that's for direct labor. Now we have to figure out overhead. All right, so we already know overhead is going to be $60 per hour. So we go back to that 200 hours that it took to complete this job, multiply that by 60, and we get $12,000 that is going to be applied to overhead. Okay, so the total cost for those services, direct labor of $36,000, overhead that was applied of $12,000, so the total cost would be $48,000 bucks. Does that make sense? So basically the same way we were doing it with the job order cost for manufacturing, we're just not, we're not using direct materials. Okay? All right. Analyzing job cost. Then they give us some different scenarios that I don't necessarily want to get into. So let's review. So that's all we've got for 2-4. What I was looking at right here, these analyzing job cost. So if you look right here, so job order cost accounting system accumulates and records product cost by jobs. And then they give us a listing where we look at direct materials. But we're going to look at some problems here in a second, so we'll skip that. All right, but when we look at our chapter summary, so our test will be on chapter 1 and chapter 2. Chapter 1, there really weren't any problems. It was more of how do we define managerial accounting? What are the differences between managerial or cost accounting and financial accounting? And then in chapter 2, we looked at job order costing. So what makes up products, number 1. You have direct materials, work in process, and then finished goods. What is considered, then you have to go back and review, well, what do we consider direct materials? So in the example of the guitar, we used wood, strings, and the bridge on the guitar. Now the glue that held the guitar together, remember that was not considered a direct material because of the insignificance of the cost per guitar. All right, then we looked at direct labor, and the direct labor is for, say, assembly line workers or people that work in the actual plant. The administrative salaries are treated differently, and we looked at those as more of a period cost instead of a product cost. And we had a couple of different terms: conversion cost, which we'll get into those in a second. But a cost accounting system accumulates product cost. There's two different ways that we do that: the job order and the process cost system. Job order cost systems accumulate cost for each quantity of product that passes through the factory. Process cost systems accumulate cost for each department or process. All right. Job order system, we do it by job because each job is different. Each job is going to require a different amount of materials or labor. So we have to count them out, and we want to see on a per job basis, how are we doing? Are we making money? Are we losing money? Where can we cut costs? Where can we make sure that we're doing things correctly? All right. So a job order cost system accumulates costs for each quantity or product or job that passes through the factory. And each job is going to have direct materials, direct labor, and factory overhead. Okay. Direct materials and direct labor, remember, they're assigned per job, and then factory overhead is put on at the end based on the cost that we already have, or based on the driver, which we've been using direct labor hours. So, all right, and that's in that last sentence on number 2. Factory overhead costs are assigned to each job based on an activity base that reflects the use of factory overhead cost. Okay. Number 3, job order cost accounting systems can be used by service businesses, which is what we just talked about, to plan and control operations. And because it's a service, the focus is on direct labor and overhead instead of materials. The cost of providing that service are accumulated in work in process, and then once finished, you transfer it to the cost of services account. Okay. And then a job order cost accounting system accumulates and records product cost by jobs. The resulting total and unit product cost can be compared over time or compared by expected cost. In this way, a job order cost system can be used to evaluate and control cost. So you think about, so let's go back to the guitar example. How could we use the job order cost accounting system to compare guitars that were made in 2021 in January versus guitars that were made in January of 2020? So, you know, the price of lumber or the price of wood, it's gone up. It's at one point last year, it had gone up 4x over what it began the year.
Yeah, forestry got really big analysis in Houston.
Yeah. So if you're counting just on product cost, the cost to buy, or the cost to produce a guitar, one of the high-end guitars in January 2021, would be significantly higher than the cost to produce them in 2020. All right, so if you're a cost accountant, or if you're on the management team at Gibson, you've got to take those things into account. You can't just look at a report and say, well, you know, our direct materials costs are up 4 times what they were in January 2020. We got to make some cuts. We got to be smarter. You might be using the same exact amount of materials. It's just that the accumulation cost was 4 times greater. So if you're Gibson and you want to maintain a certain profit margin, then what does that mean? That means that your customers are now going to be paying 3-4 times more for the same guitar had they bought it in 2020. So those are the decisions. And then you, as a manager, you're faced with, do we want to keep people coming in to buy guitars? If we raise our prices, we're going to limit the amount of certain styles of guitar that we're going to sell just because of the cost. So you have all these decisions that you have to make, and most of them are made pretty rapidly. So I mean, it can be a stressful time. All right. You guys have any questions about any of the terms, any of the anything that we've discussed so far? If not, I want us to go over a couple of problems. First, I need to remember what problems y'all have for homework. Or actually, I know what we'll do. we'll look at your test prep together. All right, so if you go to modules, and then if you go to next week, so we could actually this week, sorry, test prep number 1. You guys may not be able to see it yet.
No, this is a lot.
Okay, it'll open at 12. But you click on it, and so I took 10 questions. I took 5 from chapter 1, 5 from chapter 2. More than likely, these questions won't be on the test, but I mean, you guys have had my class before. I want to give you a chance to see kind of how they're being asked and things like that. All right.
Well, would you ever take the test prep like multiple times or additional times?
So what you can do, you can take it once, but after you take it, it'll be available.
Okay.
So you could just pull it up and then work it out on your computer. Yeah, it'll be the same 10. I thought about putting more in there, but then the likelihood of you getting the same question maybe on a test might be greater. So, because, you know, all the questions will be multiple choice. Just because a journaling question, it's hard to mimic a journal entry on your iPad or on your computer. So I don't want you guys to be at a disadvantage. So that's why I did that. All right. So let's see here. So this says compute conversion cost given the following data. Direct materials, $347,500. Direct labor, $196,300. Factory overhead, $187,900. And of course, the questions are different on my iPad. So Easton's going to be confused. Sorry, Easton. And then selling expenses, $45,290. All right. So what we have to figure out ourselves is, what are we trying to figure out? So what is a conversion cost? And this goes back to chapter 1. All right. So if you go, so what is a conversion cost? Do you guys remember what they combine?
Conversion cost,
So think of it as
it's the two that's not overhead. It's direct labor.
direct labor and overhead. So think of it as what costs are associated with converting these materials into an end product. All right. Where the product cost, you know, they're direct materials and direct labor. But conversion costs are so factory overhead and direct labor. Okay. All right. Then, so knowing that, what do we need to add in there? So we would have direct labor of $196,300 plus factory overhead of $187,900. All right. Now the selling expenses, remember those are period cost. They aren't calculated in the actual cost of the product. And then, now if instead, if I had asked you guys, compute product cost given the following data: direct materials, direct labor, and factory overhead. So you know product cost would include all three. That'd be direct materials, direct labor, and factory overhead. And if I had said, give me the period cost, then it would only be the selling and administrative expenses. Or if I had said, compute prime cost. So you know prime cost, those are only the things that go into making the product. So it'd be direct labor and direct materials. That's the one that excludes overhead. Okay? All right, so then let's look at question number 2. Let me find that one on here so that Easton's not too confused. All right, so here we go. During the period, labor cost, oops, I got it frozen. During the period, labor cost incurred on account amounted to $175,000, including $150,000 for production orders and $25,000 for general factory use, which is indirect labor. Okay, factory overhead charges to production was $32,000. So then the journal entry to record direct labor would be what? What would be the journal entry? All right, so you should automatically be able to weed out two of these. So what type of account is wages payable? It's a liability, right? So if we were going to record a liability, we would make a credit entry. All right, so when you look at these right here, you've got work in process inventory being debited on two of them, and you've got wages payable being debited. So you should automatically be able to eliminate B and C, because if you're recording that liability, you would not be making a debit entry. Okay? So then we have to figure out how do we record direct labor? Is it the $150,000 for production orders and the $25,000 for indirect labor, or is it simply the direct labor cost? All right. And if it was direct labor, then you'd pick 150. If you think it was both of them, then you'd pick 175. So you can eliminate, and you can do that on most of these. You can eliminate a few answers before you ever start, so it reduces your chance of being confused. Okay. Number 3, let me find it for him. All right. When job 117 was completed, direct materials totaled $4,400, direct labor $5,600, and factory overhead $2,400. A total of 1,000 units were produced at a per unit cost of blank. Okay, so if you add up direct materials and direct labor, that gives you 10,000. And then if you added factory overhead to that, that would be 12,400. So a total of 1,000 units were produced at a per unit cost of what? So it'd be $12.40. Which, you know, looking at the other three options, that would make sense, right? It wouldn't be 12,400 because that's the total all-in cost. So that wouldn't be a per unit cost. It wouldn't be 1,240 because that would be the cost if you made 10 of them. And it wouldn't be $124. That'd be the cost if you made 100 of them. But you know, it's only made 1,000. So, okay. Let's see here. Which of the following? All right, number 4. This is really confusing here. All right, number 4. Which of the following is part of factory overhead cost? Would it be sales commissions, direct materials used, depreciation of factory equipment and machines, or depreciation of a salesperson's vehicle? So sales commissions. Well, all right, so direct materials used, that's going to be direct materials. Depreciation of a salesperson's vehicle, that'd be a period cost, if anything, because, you know, sales and administrative, they're period cost. So the answer would be B, the depreciation of the factory equipment and machines.
I forgot about period costs. Overhead is specifically related to production.
Yeah. All right, number 5. Let me find that one. Which of the following is not a characteristic? All right, so number 5 says, which of the following is not a characteristic of a job order costing system? Okay, so you know we're comparing job order costing to process costing. Okay, so A says it provides a separate record for the cost of each quantity of a product that passes through the factory. B, it uses only one work in process account. C, it accumulates costs for each department within the factory. Or D, it is best suited for industries that manufacture custom goods. Okay, so if you were going to do the process of elimination, you could automatically start with D. So if you manufacture custom goods, you would definitely be using job order costing. Okay. A provides a separate record for the cost of each quantity of product that passes through the factory. Or with process costing, you're not doing that. You're doing it by process. So that wouldn't make sense. So you have B and C left. So it uses only one work in process account, or it accumulates cost for each department within the factory.
It's gonna be me.
So I'll let you guys figure that one out. All right, let's look at number 6. Which of the following terms is used? All right, so number 6 says, which of the following terms is used to describe the process of developing the organization's objectives and translating those into courses of action? All right, so now if you remember, this goes back to, let's see here. I believe this was the beginning of chapter 2. Nope. It was in chapter 1. And it was... Yeah, all right, so this goes back to chapter 1. This is on the management process. So, there's planning, directing, controlling, improving, and decision making. All right, so they're asking which one of these 4 describe the process of developing objectives and then translating those into courses of action. Okay, so planning states that management uses planning in developing the company's objectives and goals and translates those objectives into courses of action. Directing is the process by which managers run day-to-day operations. Controlling, monitoring the operating results and comparing actual results with expected results is considered controlling. Improving feedback is also used by managers to support continuous process improvement. And then decision making is taking all of this information and trying to decide among alternative actions. Okay? So I'll let you guys figure out which one that is. All right, number 7. Cost other than. All right, cost other than direct material cost and direct labor cost incurred in the manufacturing process are classified as what? Now, the key word there is incurred in the manufacturing process, okay? Not in the overall selling process, okay? All right. Number 8, in a job order cost accounting system. Job order cost. All right. So number 8 says, in a job order cost accounting system, the journal entry to record the flow of direct materials into production consists of blank. All right. So if we are taking stuff out of materials and moving it into production, materials is an asset. So if we're taking it out of materials, that would be a credit to materials, right? All right. So if you know that right off the bat, then you automatically eliminate A and you eliminate C. All right. So then B and D say a debit to work in process and a credit to materials, or a debit to factory overhead and a credit to materials. So easy enough without saying the answer. All right. Did I put the same question on here twice? Cost other than direct materials. Sure did. Well, that stinks. All right, so I put the same question on there twice. Didn't mean to do that. All right, then lastly, number 10, on job 117. All right. I put, what? The same 2 questions are on there twice. All right, scratch that. I'm gonna have to go back and fix it. Good thing it's not ready yet. But, so that's basically what it's gonna be. You can expect questions based on, the terms that we learned, a few questions about job order costing, calculating prime cost, conversion cost, product cost, period cost, things like that. You guys have any questions about anything? All right. If not, that's all I have for today.
So Thursday is, we're gonna come in here and go over this again?
Yeah, so we'll go over this, and then if you guys have any questions, and I guess eat pizza. So there'll be 2 more questions that we didn't talk about on here, but that I'm about to fix. But then if you